Hi everyone, welcome to week 4 of your Insurance for Pharmacy Technicians course. This week we are covering all of Chapter 3. Chapter 3 is all about private insurance payers and plans, and so we're going to be looking at a lot of different things within this, focusing mainly on just key terms and understanding the differences between plans and how they all work and things like that. So the first several slides is the learning outcomes and those key terms. So let's just jump right into some of the different types of private insurance and plans. So when we think about private insurance, basically this is the type of insurance for people who are not covered by what is termed entitlement programs. Entitlement programs are things like Medicare, Medicaid, things like that. A lot of employers offer their employees the opportunity to become covered under their insurance. And then if you're self-employed, you might have to buy your own private insurance. So just kind of depends on your situation. When we talk about employer-sponsored insurance, it's typically some sort of a group healthcare plan. We have typically a pharmacy benefit manager that is part of that plan that handles the administration of the pharmacy portion of that. So keep in mind when we're talking about insurance, there's a lot of different moving parts and pieces. So it's medical coverage and pharmacy is just a piece of that. So, the pharmacy part of it is just one part of your medical insurance plan. Typically the health plan has its own, different rules and eligibility for when you enroll and when you can get into the plan. Typically we have something called, events that will trigger that. So things like the birth of a child, getting married, those are all things that would be triggers to allow enrollment, in addition to the normal enrollment period, which is usually at the beginning of a new year or when you're first hired. So those are some of those events that can cause you to be allowed to start the enrollment process. When we talk about employers, the federal government is probably one of the biggest employers. So they have the largest sponsored health insurance program. So the FEHB is actually administered by the government. And so it's really just another type of employer-sponsored medical insurance. So it just kind of falls into that same bucket, but we call it out because it is the largest. And then, of course, there's self-funded plans, which means we actually cover our own costs. So if we have an employer who is a really large employer, one of the companies that I work with in my other job is United Healthcare. Obviously, they're self-funded because they have such a large employee base, and obviously they have their own insurance. And then, of course, we have individual health plans. These are just private insurance. A lot of times it's those folks who are self-employed who have individual health plans. Now, once you know about the different groups of people or groups of insurance, then you need to know how do those different insurances, what kind of health plans do they actually have. So these are the 5 major types of health insurance plans. You may be familiar with some of these. Some of these are more, most people have a little more general knowledge of some of them than others. PPO is considered a preferred provider. This is really the most popular of all of the different types of managed care. It includes specific physicians, hospitals, pharmacies. If you use those within your network, you get a special deal. Your insurance coverage is better if you go through your preferred provider within this type of health insurance plan. You can go out of network, but it typically costs more. The HMO is where you pay fixed types of premiums. Typically you pay small or no co-payments, but you can't choose your own doctor. You have a single fee, For a visit. You have what's called capitation, which means they can't go over a certain amount, but it's a lot more restrictive. You can't just go anywhere. Point of service, POS, is very similar to and has some similarities with HMO. So this will kind of allows you to have a little more flexibility with an HMO, seeing somebody outside of a network. So it's got some of both 1 and 2. Indemnity plans, say that 10 times fast. These are basically based off of a negotiated discount for members. So it's not specifically, any particular network, but they have to have, a co-insurance, and, they negotiate directly with the physician, and this is what you pay, period, type of thing. The consumer-driven health plan, very high deductible for this particular one. You typically have a savings account that's used to pay your bills before the deductible is met, things like that. So you're typically going to see 1 and 2 being the most common types of health plans. And then within these health plans, you're going to have different pharmacy benefits. So you're going to have specific covered things within your pharmacy benefit plan. You might have certain legend drugs, which means things that are used on a regular basis, maybe blood pressure medications, things like that, that are going to fall into the pharmacy benefits formulary, which means they're going to say, this is the one that you can always get. And maybe we aren't going to charge you anything for it, or maybe we're going to charge you minimally for it, things like that. Typically, then the other drugs fall into tiers. So generic drugs are typically at the lowest level, then the preferred medication, and then any non-preferred brands. So something that maybe is, not particularly covered. So as you go through and you read about these different things within these types of insurance plans, make sure you reach out to me and let me know how I can help, and have a great week.